Good evening, everyone. Good evening. Welcome all to this session. Can I get a few voices in the room that I'm able to come across to all of you? Good evening, everyone. Am I audible? Am I coming across? Can you see me? Can you see a screen? Good evening. Thank you. Thank you. Thank you. Thank you, Vinny. Thank you, Avinash, Praveen, Monk. Thank you. Perfect. I hope everyone's had a good session today, and it's been a slow session, right? Today, expected market is moving into a balance, and we'll speak more about it. But we wait, for a few more minutes, for a few more guys, to join in. But the chat is open, guys, and if you have anything, to comment about the day, about the sessions, please feel free. Go ahead, introduce yourselves. I'm hearing you. I'm listening to you. And if you got anything at all, to talk, this is an open forum, and we can have open communication over here. Please feel free, to introduce yourselves and talk to us, about what you do, how you trade, etc., etc. I'm reading all of you. I'll walk you through, about the market profile part of it also. I promise, I'm not going to keep it into a monologue. We'll keep a dialogue open, and we will, try to ensure that everybody gets a question in or gets a voice in, and it's not just me, speaking in a monologue all through. Yeah. Thank you, Avisha. Thank you, Avinash. Thank you. Right. So, yeah. So I have a market profile chart on the left of my screen, and the order flow chart is on the right. And I think, we are good to go. And we'll speak, about what is the session today. Okay. I'm listening to what you have to say, and the question is coming about cumulative delta. We don't use cumulative delta in the order flow, and I'll talk to you about why that is the case and why exactly we need to move on with that, right? So we are going to be focusing on the market profile. We're going to be focusing on price movement. We are going to be focusing on the role of volumes, and the way we go about doing the work we do is we focus a lot more on volume activity, volume action, and that we focus on because we feel it's got a precedence over price action. But before all that, what we do is we focus on market structure. And if you recollect that we spoke earlier at the start of this series, and I was in this webinar with you at the start of the series of March, and I told you that the market structure is a little bit different from what it has been through the months of December, Jan, and Feb. All those three series, in fact, from October, were dominated by sellers. But halfway through the series of March, it's the 17th of March today already, you can see that there is a lot more effort being put by buyers than what you saw through the months of October, November, December, Jan, and Feb also, right? And if you go back, and revisit that webinar which we had done, I think it was the 1st or the 2nd of March, I told you the seller looks a little bit done over here. This is a time for the buyer to step back. The buyer has not done a great job, mind you, because in the markets, there's nothing called a V-shape recovery in the markets. The markets do not make this letter, which we call a V. It's generally, in terms of recovery, you will not see something like this appear on screens whenever a market is wanting to put in a bottom. It's basically more like a U-shape, which is a rounding bottom. And I feel, that if any kind of a good up move has to come, you've got to see a structure, which resembles a U first. And the U part is about waiting. It's about knowing, where the market is aligned in terms of a balance. That means the buyer and the seller are equal weighted or equal in strength. And then, we talk about a movement which can be seen as upwards or otherwise to come, right? But till you see that U on the broader swing, in the shape of a cup, you should not talk in terms of an up move, etc., right? And this is there in market structure, and we put a lot more emphasis on market structure over the movement of price, over the movement of volume, because volume comes when the market structure is sound. When the market structure is good, volume is the one, okay, which comes in next, and because volume comes in, price action follows, right? So think about market structure as, you climbing, let's say on a trek, you're going up a mountain or you're going down a slope, and you're walking, okay, you're trekking, and now suddenly, okay, you realize, okay, that the upward climb is a little bit difficult, right? So you can say that to go upwards is going to be a little bit difficult, because you're trekking and you're seeing the environment, you're seeing the surroundings, and you're realizing, okay, that the path of least resistance is lower. Okay, in fact, it's going to be a lot more resistance to climb up, because you're seeing an uphill out over there, right? Same thing, okay, you can do, okay, for downhill. You see, okay, something called a easy slope to go down, and you feel, okay, that the seller has got a little bit more control over the movement of price action over that down slope which you got. And then, okay, you say that the path of least resistance is downwards, right? So you look at all of these things and you arrive, okay, at something called structure. And then, okay, once you have a clear understanding about structure, about who's got a clearer path, whether it is up or whether it is down, where the path of least resistance is, you chalk out a plan as to what the buyer is doing and what the seller is doing, right? And that is what we call the structure of the market. Within that structure, you look at the role of the buyer and the seller, and sometimes, okay, the buyer is stronger than the seller. When the buyer is stronger than the seller, you can say price is moving up, right? Because the demand side volume is greater than the supply side volume, and price has no option but to keep climbing up. And then, okay, there is a case like we've had for the past 5 months, where supply side volume is greater than demand side volume. And then price, okay, has to drop downwards, okay, to find more buyers to be participants in the auction process. So that's the role of discovery, that's the role of price discovery, that's the role of structure. And within that structure, what we do is we don't take the view of structure over like a very large term. This is not, okay, but what we are doing over here is not related to a stock holding or a period of holding which is stretching, okay, about 5 years or 10 years or 15 years. What we are looking at is a market, okay, which is different from between series. So the series of March in which we are in currently is different, okay, from what was in the month of February, and we already seen evidence of that. And it's going to be different from the month of April. So we don't want to look too far ahead. We don't even want to think about what the market will do in April and May. We want to focus, okay, on what the market is doing in the month of March, right? And as we do that, we break it down into 4 weeks, which is the 4 weekly activities, the weekly sessions, which start from Monday right up to about Friday. And within that, okay, we try to see if anything which we thought was possible at the start of the series is changing, whether there is new information which is coming in to think about the market a little bit differently from what it has been through the past few months, right? So we started off March series saying that the market wanted to be going sideways to slightly up, and there wasn't a lot of initiative for the seller to move the market lower. So this is, okay, where we are in the series of March so far. I'll drop a spot chart and we'll quickly, okay, go through, okay, what we've done so far in the series of March. The monthly profile is on screen, and we are here, right? The rightmost part is where the series of March is. So this is, okay, the entire series of March, and this is today. This is what we've done. This is what we've done through the entire series, and this is the entire month of Feb, right? So we are in that lower part. There's a small gap over here in the Nifty spot, which is still a resistance, which is a supply. The market was balancing prior to it. It broke down, and for the past 3 weeks, we've been sideways to down. What is of importance to note over here is that we have not gone through the February series lows, which is what, okay, our original plan and thesis was as we started moving into the month of March. So this is consistent with a market, okay, which is wanting to now go into a balance, right? And from this balance, okay, as you all know, will come move to imbalance, and which is going to be the decider of the next movement of price in the market, right? So this is a structure, and this is a weekly profile. So this is okay where we are placed right now, and it's a Monday, and it always makes sense okay to look at the larger structure in terms of the market over here. So what I'm looking at is these last 3 weeks we got some consistent highs which are in this gap zone. Prior to that, the market was balancing, which is this part over here. We broke out of this balance into an imbalance. The market proceeded lower, and then okay, it made a low around here, which was the close of the Feb series. And we spoke okay about a rise coming in the first week of March. That rise okay came here right up to test the previous week's high. And last week okay, we spoke about a consolidation which wanted to hold that 22,350 zone, which was the VWAP of the prior week, and the lows were here exactly 22,350. And this is okay where we are as we start a brand new week, right? So this is the story so far. This is the structure. And one thing, okay, if you look at this weekly profile, you will note that the market is now going sideways. It is into a sideways pattern. Now the question over here is, will it continue? Okay, what is going to happen okay for the rest of the March series? Now for that, you have to okay look at current data. So all this information is what has happened so far, and it's in the past. The past has given you your present. Okay, that's where you are right now. What happens from here determines the future, and what you need to do over here is check whether there's any change which is happening over here in this coming week, which is going to be different from what we have seen in the past 3 weeks. And if there is big change and there is a big difference between what is happening here and the rest of the series of March or the past 3 weeks, then you can say okay, there is an incentive for the market to either go up or down. But if the same kind of volumes repeat and the same thing keeps happening, then you can say the market is wanting to put in a balance or a D-shaped profile over here, right? So this is the weekly view. And to understand this weekly view, we just have to look at the market activity of today. And I'll go okay to a futures chart, and I want to specifically look at the March contract. This rightmost profile over here is where the market traded today, right over here, right? And this is what we call a normal day in the market. There was little incentive to go past this zone. The low of 22,500 today was the VWAP of Thursday's activity, where the market okay did that little move. And what happened over here on Thursday, settlement day, was that the market okay tested this previous initiative seller, and it put in a failed auction, right? And early at the open, we were looking for signs of the market wanting to go and stay above the failed auction, and it did not. In fact, okay, I posted a chart of the market putting an IS3 signal at 10 a.m. in the morning. So that was telling us that there weren't any buyers to push it above this 22,620 level of the futures. Now, why is this level important? 22,620. This is a previous failed auction point. And what is the meaning of a failed auction? The buyer failed, right? So there was an incentive for the buyer to take out this seller, cross this VWAP and go higher, but the entire activity over here failed, and the move okay came down to the lows of the session. So you can say the buyer failed, and today activity was about the buyer failing in again. In fact, today we did a little bit better. We went about these highs of the past 2 days. We went above the failed auction point also, but not for more than 1 TPO. In fact, okay, by the middle of B period, we were down below the 22,620 zone again. So you can say that 3 sessions in a row, the buyer has failed to go up about 22,620. Now, what's happening lower? This is the VWAP. This 22,500 of 0 is 22,500 of the low of today is the VWAP of the previous session. We held that. It is also the volume distribution point, the largest volume of the previous week, and you'll understand that by looking at this profile, the weekly profile. This one over here is where the largest largest volume concentration was for the entire week which ended on Thursday, the shortened week of 4 days, right? So this is the zone which is important going forward also, right? And if this fails to hold for some reason, then okay, the support okay is that same 22,350 zone, and below that there is another support around that 22,180, which has got those singles up ahead, right? So just to quickly summarize, what we expect the market to do next is, currently it is balancing. So when a market is balancing, do not be looking for those fast pacey moves. Okay, a balancing market is a market which is extremely slow, and you got to adjust. You got to not expect 200 points in 5 minutes kind of moves over there. In fact, okay, you'll be very happy to get a 100-point one-way move in a market, okay, which is flat or balancing. It's not basically a complete market, okay, for even the writer. We were at 22,500 CEPE through the day, and for the bulk of the session, especially okay, the last 4 hours, it remained around that 230 zone. So that does not mean okay, just because a market is quiet, it is an incentive for the writers to come, right? But what it does tell you is that the market is now in a quiet phase. Okay, it is in calmer waters, and when the market is quiet, you got to tone down your expectations, and you got to read the room, so to speak, and understand okay that this is a silent zone, and you got to okay, like, not have that over expectation that a 200-point move is going to come, or a 150-point move is going to come out of nowhere, and the next 5 minutes are going to be your best 5 minutes in the market, right? That kind of expectation is wrong to have in a market like this, right? So looking up ahead, what we see now is this highs of today and this failed auction zone 22,620 is the minimum okay the market is going to track. Somewhere around here is the RO point. I mentioned about it in my tweet earlier this morning. So the condition is for a market okay to be bullish, it has to start trading above the RO point 22,680 roughly, right? 683 is the rollover point of last series. That's where the entire volume of February came into March, and we saw all that short rollover happening in the last 2 days of the series of February. So that okay is there at 22,680. 620 is the other condition. Okay, we start moving. If that is the upside levels, we have to okay start looking at it in terms of the upside over there for the duration of this week, that is into Thursday and Friday. If we do that, the market has got a run at about 22,750 and slightly higher. I'm expecting okay this singles right around this zone. Okay, these are also singles, so somewhere around this zone, around this 22,850 900 is what this market should look at if we start trading above this 22,680 zone. So this is one possibility the market has. The second possibility is that today we did not succeed in breaking down the VWAP of the previous session on this 22,500. So the minute that breaks, the market okay has a run back at 22,350 where it found support last week, and that zone can get tested again. So that's about a 150-point move, which you should be planning for, which you should be preparing for. And below that, this is okay where the market stopped last week, the 22,350, and it was important from multiple reasons because there was a previous buyer over here, and this is okay where the move okay came to last week. And if this does not hold, okay, then the next support is this 22,190 VPOC zone, which has got that big buyer of the 5th of March, right? The initiative buyer who came in on the 5th of March is present here around this 22,190, 22,200 zone, right? So largely speaking, after what has happened today, and this is what we call a normal day, if this market okay decides to travel away from the range, and it should sometime okay tomorrow, day after, we are looking okay for it to test this 22,350 on the lower side, 22,190 on the lowest, the second objective over there. And if it does move higher, then those two other single prints are where you should focus your attention on. So which is this right here around this 750 zone, this value area high zone, 22,750, 800, and roughly around here this 22,875, 22,900. This could be the expected range of any big movement which happens during this week. In the event that does not happen, and there is a condition in the market, okay, which is called a balance. And the balance means, okay, that the market is gonna keep going quiet. It's going to be a dual way of looking at it, with no party in immediate control. And that is the theme so far in the month of March. The seller is backed off. The buyer is still not confident, right? So we are going to be looking at a dual play where just going to be, okay, little bit of buyer, little bit of seller coming in, going out, and proceeding forward. So that is what you would be tracking in terms of current development. And that current development is best tracked, okay, through an order flow chart, which gives you a very good picture about what the volume activity is doing in the market, right? So this is, okay, what I was referring to early in the morning. And when you're looking at order flow, it doesn't make a lot of sense to go too much deep into the past, because all that data, all that information is already being captured by the market. But what we were looking at early in the morning was a potential move above this failed auction point. So the market did try early in the morning to put in some buy right over here. It started off very well. This is today's order flow chart. It's 9:15 in the morning, and this is a 3-minute chart over here. There was good buying, okay, initially. 632, 316, we got an IB over here at 22,620, and we shot up right up to about 22,680. On this zone, okay, like I said, 22,620 is our failed auction point, 615 rather, right up to about 22,689, 20 points short of where we were, which is the rollover point. This is a wall of worry for the buyer. Okay, and what he needs to do is typically, okay, to cross a wall of worry, he needs to put in an IB plus IB pattern, right? So the buyer tried today, and technically speaking, what really happened is this initiative buying should have held 22,620. The buyers, okay, should have held, okay, all these buyers, okay, should have held this low of 22,620. But you can say that this signal failed, okay, it hardly, okay, stayed for 1 minute about 22,654. Remember, an IB3 activates above the high of the IB3 bar, right? And this got activated at 654, but it hardly stayed, okay, over there, okay, for about not more than 1 minute. And since then, we started largely trading below that 654 again, right? So it went down, and this signal has failed by it going below 22,620. But not just that, the signal, okay, got cancelled out by an initiative selling pattern, an IS3 signal, so which was at 22,623, and this high of this IS signal was held through the session today. So we did not move up above this IS3 high for the rest of the session today. But going down, the market, okay, did not show a lot of supply. So if you see this order flow of 30 minutes, as the market, okay, got those sellers early at about 9:45, 10 o'clock, it went down right over here. This dotted line, yellow dotted line, is your initial balance low, IB low, the low of the first 60 minutes of session. And if you see down over here, as the market dipped lower to 22,500, what do you see? You see zeros. On which side? The supply side, right? And when you see zeros on the supply side, what is it telling you? That there isn't any supply in the market. There isn't any selling in the market. Same way over here, zeros, big buyer at the open, big buyer at the open, and all these greens over here. And again, when the market comes over here in this, what we call the 12-15 period GTPO, again, you're seeing zeros over here, right? And in the next TPO, as the market moved lower to 22,500, again, you're seeing zeros over here, against which a small number is there on the buy side. And all these greens came in here. So there was a cover of the short happening, and then an IB30 candle came over here at 22,604, 22,530. Now, mind you, this IB30 is not activated still, because we have not put in a move about 22,604 yet in today's session, right? So you can say that the buyer tried today early in the morning to take the market up, and he could not. There was an IS signal which came in. The seller, okay, was absent. So that's why this day, and what we saw today in market profile, is called a normal day. And a normal day is another way of a market which is there in a balance zone, right? Now, the reason, okay, I'm reading this order flow chart to you is because there are important things for you to consider as you are deeply trading into the market, as this information is flowing to you, there are some important messages which come from the market, which come from the chart you are looking at. And those messages, if you can pick up, you can read, you can understand, you put yourself into a much better position much better position to understand the message of the market, right? So there are various points, like I told you, okay, around over here at 10 a.m. today, the buyers should have done a good job, but instead, what we got was an IS signal, an initiative selling signal, right? And when an IS signal comes in, you cannot hold on to a long bias, because okay, if you hold on against aggressive initiative sellers, you would be at a loss, right? So this IS3 is got activated, and immediately as soon as this IS signal comes in, okay, you know, okay, sellers are in control, and you activate it below 22,591. When price probes below it, you put a stop loss at the 22,623 high, and that's where this trade, okay, takes off. Now this is got a entry below 591. It's got a stop loss of 22,623, which is roughly about 33 points. If you get 1:1 on this, you should take it. If you get 1:2, it's a bonus. But this trade, okay, went on to give you about 100 points, roughly about 80 points, right? So 1:3. So you take it with this thing. And the idea over here is this is a high percentage signal. You are not, okay, staying, okay, with the rest of the noise. You're looking at high value propositions. You're looking at high value signals, and you're removing the noise of the market and focusing on these kind of signals over here. Right. So just to quickly recap, whenever you get this in a 3-minute time frame, or you get it in your 5-minute time frame, an IS signal needs to be activated below the low of the bar with a stop loss of the high of the bar plus a small filter. Say I use about a 4-point filter for the Nifty, and for 591 I'll use another, say, 585 or something of that sort, and I'll short, okay, below it, either in the futures or in the long puts. My stop loss is over here. So if I'm giving myself an allowance of 33 points of stop loss, I am looking for a profit of about 33 points to about 66 points. If I get 90 points for it, it's an extremely good trade, because it's a 1:3 ratio. Generally, I will get 1:1 very easily. 1:2 is a bonus, and 1:3 is an extremely good trade, right? And the same thing, okay, goes. The same thing goes if you are looking at it on terms of a 30-minute signal. So this is an IB30 signal. For any reason, this activates tomorrow above this high plus filter. So it didn't activate today because we stayed below the low, below the highs of the candle. We could not take out this high of this initiative buyer. So the process is that you go on a buy above this, and because, okay, we have another reference line over here of the FA, the failed auction, I will put in a buy only above this 22,620. My stop loss is going to be 22,530, right, which is about roughly about a 90-point stop loss. I'll be again looking for a 1:1, right? So that's about 620 plus 90, somewhere around that 700 zone, which is where the rollover point of the series is. But then again, what I'm doing is, as the market, okay, goes, okay, to that 680, 690 level, I'm not playing blind. Right, very, very important. As the market, okay, probes, okay, to that level, you are on the lookout, okay, to see if there is initiative buying coming back into the market, or the sellers coming. So suppose, okay, the market goes back to about 22,680 on this buying, and there are IF3 candles showing up over there. What is that telling you? That is telling you that supply is coming back into the market, right? And then you have to be careful about your long exposure. You never bet against a market which is putting IS signals for a bias which is upwards, right? So respect the movement of the market, respect what volume is telling you, and you will eliminate most of the mistakes the markets are doing, right? So I hope, okay, this is helpful. I'll just quickly pause to take a few questions. If you have, please feel free to shoot, my friends. We'll keep this very 2-in-1. I made some points, and if you have any questions, okay, to ask, do feel free to ask. I'm looking at the comment section right now. If you have anything, okay, to add over there or ask over there, please feel free to do so. Yeah, Friday VWAP was also range extension, Avisha. You got that right. So that's why that was a double support over there. So you can say we add a lot more weight. See, not all reference levels are to be treated equally. A lot of people, okay, what they do is, especially okay, novice traders, when they look at a support level, they think that all support levels are to be treated equally, right? Sometimes, okay, some levels, okay, have benefit of multiple supports, multiple areas, okay, give it a confluence, and some supports are weighted higher than the other supports. So the 22,500 held because that was the VWAP as well as the range extension target. Okay, the question is you kept hearing about DPOC. DPOC is the developing point of control. Simply put, this is this white line which is here. So the point of control is a very, very important parameter in both market profile and order flow. This white line, when it is moving through the day, we call it a developing point of control because it is still developing and it can keep changing. Why does it keep changing? Because volume is still flowing into the instrument and the session is open. So it is going to be a dynamic price movement, which is going to at any point in time tell you where the largest volume is being traded during a session. So we call it a DPOC, D for developing point of control. When the session is closed at 3:30 p.m., this is what we call a VPOC, volume point of control, or simply put a POC, or the zone, okay, where the previous session volume was. So that is this zone of Friday was around 22,438. So this freezes at 3:30 p.m. No more change is possible because no more volume is flowing into it. IB30, yeah, the rules of the process we follow is that IB30 is to be is a signal, okay, which is generated in that 30-minute time frame and valid, okay, for about 10 bars or 300 minutes. So we follow something called the rule of 10 bars, and it's important to know and understand that because by default, a lot of us, when we are first new to trading, we take a signal and we think that signal is forever, right? So everything in the derivatives industry is time bound. In fact, all our series also is got a certain end date, right? The product itself is built on time, and we have to understand our signals in terms of a time element also. There has to be an expiry date for the signal also. So no signal is forever. Okay, the information from the market keeps coming in, data keeps flowing in, and when data is flowing in, the most recent information is the most important information. What has happened yesterday, what has happened day before, what has happened 1 month from 1 month back is redundant. It's no longer okay part of the cycle. The new information supersedes whatever it is that has happened previously, right? So pay attention to current information, current data, and use that as the most important metric going forward. Right now, I say this all the time, the markets open up every single day for you and I to make changes to our bias, right? Had it not been the case, we would have worked with yesterday's data and we would have taken previous year's signals and signals, okay, of 10 years back and kept trading, okay, based on those signals. But why do the markets open every day? They open for you and I to assess the changing landscape, changing environment, and to take action. And when people take action, when people, okay, do adjustments, when people change volumes, short term, long term, whatever, then, okay, you can say that there is new information coming in the market. And when there is new information coming in the market, there is a potential for a different kind of a price move to emerge, right? So something on that lines, okay, happened in the month of September. New information, seller took control, and then something on those lines on a very minor scale, it's happening in the month of March. We're seeing a seller step back, and we're seeing, okay, a buyer coming back. In fact, all through those past 5 months, you have not seen a lot of these IB30 signals. This entire series, half of it, I have not seen any IS30 signals. I think one signal only has come in earlier in the series, but it's mostly been about IB30 signals. Some of them have not got activated. There was a signal in the bank Nifty also on Thursday that was also not activated. So I want you all to understand that just because a signal is come does not mean okay it is auto activated. It needs to be defined okay by the rules of the process we follow. So this came in on the bank nifty at close, right? So 48,196 came in as an IS30 signal, and 48,100 was the low. And today we did not go below 48,100 at all. So this was not activated, right? And when we moved up about 48,196, this was cancelled. So this you have to be careful about the way okay you're going to be using the process. The whole reason of having a process is that we know okay how to trade and how to work this thing up further. The question is the 22615 FA is intact. Yes, the 22615 FA is intact. I spoke about it. It's something okay which we need to look at. 313 profile is a profile which has got tails at two ends, right? So I don't know if I can pick up an example of a 313 profile from a recent memory, but just to explain it to you, there hasn't been a 313 profile of late, but it would be something like this. It would be a value a single print lower, and this tail which you see over here, if it had continued over here, this would have been a 313 profile. So a large value area in the middle, tails at one end, and just think about this tail from the previous session going up over here. If this was the case, this would be a 313 profile. So the question is, last week in the bank nifty and nifty moved in opposite directions. They can move in opposite directions. The volumes inside each of those instruments are different. Traders are taking different positions nowadays, much more than previously. So you could have okay some traders, some institutions who are short nifty, long bank nifty, or short bank nifty, long nifty. Don't tend to think in terms of the nifty and the bank nifty moving in the same direction anyway. Any day, because the cycles are different, the derivative cycles are different, the exposure taken to these instruments is very, very different, right? So I, for example, okay, I'm a nifty options trader. I work differently okay with my option strategy for the nifty, and I'm not using that same option strategy for the bank nifty. The bank nifty is a monthly time scale, right? So I'm looking at the bank nifty very, very differently. That's why okay the bank nifty is doing one thing, the nifty is doing one thing, because the same strategy is not working in both the instruments. Right, keep your questions coming. I'm reading you. If a FA is tagged on a falling day, the FA has been tagged. The question is, if the FA is tagged on a falling day, is it not cancelled? So the FA is you're right okay about that question. The FA is tagged, the FA visit is done. That part is cancelled. Okay, but what I'm speaking about is the movement above the FA point and the movement below the FA point. So that bias which we hold is still there. So the bias rules of failed auction are long above FA point, short below FA point, right? So the FA point was 22,620. No doubt it's been revisited, and that FA action is complete. But in terms of the bias, you got to see buyers come back and take out that FA point and see a movement above the 22,620 zone, right? I hope okay there is a clarity okay on that part of it. So not just 22,620, like I said, the same rules apply for the RO point also, the rollover point, that is at 22,685, and that would be something okay which you should be looking forward to, right? So this is where we are, guys. The bank nifty also is showing me okay these singles on the lower side today. This was the responsive buying, and today okay we hit this extension, and what we've done is we basically okay created value in this zone where the market traded for the extension last week. So in terms of structure, what the market has done is that it traded in a zone where the previous week it did not trade at all, right? So this is a pause action. It's come okay around this VWAP and all. So up ahead is also a little bit of supply here around this 48,800 zone. So this is still a very pause mode kind of it's somewhat a P-shaped profile. Not much shorts over here. We were watching okay that zone around that 48 300 380 zone earlier in the day in the VMR, and it did not okay really put any movement over there. So this is a hold pattern, nothing conclusive in this profile. So till it gives you more information, you wait for the structure okay to give you more information, and then you take steps next from there, right? So this is okay where we are. What I wanted to emphasize to you is that you start off with a view for the start of the series. You form a view about how the market is expected to go, and then okay you try to track it on a weekly and a daily basis, and having a process okay to understand this is what is critical for you, and whether okay you're following a rock solid process to understand the information the market is giving you, whether the kind of information the market is giving you, and your process okay should be complete to pick up not just up moves in the market. A lot of people are very good at picking up up moves in the market, but the process okay should be robust enough to tell you okay that the market is no longer wanting to move up, it is now wanting to move down, and it is also should be robust enough to tell you that the market is now good okay to go sideways as well, right? So there are three things okay which are possible in the market at all times, and you got to be having a process okay which identifies all three of those, right? Just having a process and forming a habit okay with the process is something okay which is critical for all of us as traders. Just think about it as you getting up in the morning and you brushing teeth. It's something okay which comes naturally to you. When you look at charts, the process okay you're going to employ okay when looking at that chart should come automatically to you. That's the hallmark of a good trader. The chart should speak to you. It should tell you okay what it wants to do next, and then okay your trades okay will come automatically okay from that. Let the chart speak to you. The trades show up for itself. What a lot of traders do is like they go and hunt for trades and they look all over the charts without reading the message of the chart. If you're looking for trades that way, you're being very random, you're not being systematic, you're not following a process, and then okay finding trades is difficult, and then getting good trades is even more difficult, right? But if you're looking at it in terms of an information, the chart, you're looking at it in terms of it giving you information, then when you read that information the trade becomes clearer, and when the trade becomes clearer you are eliminating okay those chances okay of going wrong with this, right? So I'll leave it over here, guys. Thank you all okay for joining in. It's about 5:45. I hope okay it's been important, and it's been useful to all of you. Just go okay through what you already know. You would have to okay brush up okay on some of the things you already know. Keep following us okay on Twitter. Okay, we like to talk okay about these markets. There is a lot more okay we can do okay with the with the information okay the markets okay keep giving us. But get those basics sorted. This is the minimum condition in 2025 to be a good derivatives trader. You've got to have knowledge and experience on your side, right? And the faster okay you get to learning about markets, the faster you get to understand the way okay markets work, the more is the amount of money you're going to be making in the markets. If you're not learning markets, if you're not being knowledgeable about how markets work and how they trade and how you should be trading, then the chances of okay making good trades okay become that much more lesser, right? So focus your attention, focus your energies on understanding, on learning. Read books, go for e-courses, do okay practical studies, but don't compromise okay on knowledge. Okay, the only thing which will help you is a good solid understanding about how you work the markets, right? So I leave it over here. And if there's any questions okay to add or ask, okay, please feel free to ask me over Twitter. You can reach us okay on our support at vitrender.com. There's going to be a recording of this available okay right under my Twitter profile. If you want to go through it again, please go through. And if you got any questions at all, okay, please feel to ask anytime, right? Thank you all for joining in. I'll sign off from here, and I'll see you sometime soon, right? Thank you.